Make sure that as you're interviewing your team, you're interviewing them for size as well. You know, what is the average size of clients that you're working with? You may really like your CPA, but if all of the other clients that you're working with make $200,000 a year and you're making $2 million a year, they're just not going to have the same level of advice or knowledge that they would in your situation.
You're listening to Ice Cream with Investors, a podcast that is dedicated to teaching you how to better invest your money so that you can live a more intentional life. I'm your host, Matt Four, and it is my goal to teach and empower you to remove the roadblocks to your financial success.
All right, Shauna, welcome to the show.
Thank you so much for having me. I'm so excited because we're definitely talking ice cream. Is that what I heard?
That's right. That's right. We like to start with the difficult questions here, and mine is, what's your favorite ice cream?
Strawberry.
Strawberry.
Could you tell I'm in pink? Strawberry.
Yeah, well,
that's
a good point. I was actually So I subscribed to this Forbes newsletter, a Fortune newsletter, and this morning it was about these organic farm-grown strawberries. It starts with an O. Do you know what I'm talking about?
I don't.
So I've heard it on a couple different podcasts by now, and I forgot the name of it, but they are like the best strawberries in the world because it's all naturally grown and no pesticides, all that kind of stuff. But
I'm all in. Well, I know what I'm doing when we get off the podcast. So the ice cream that I eat, my favorite ice cream is Alden's organic strawberry, and it's thick and creamy with the anyway, melt in your mouth. Now you got me drooling.
You were the perfect guest for this show. Like, you went straight into, like, there's a specific type, it's by a brand, and here's why.
Absolutely.
I like it.
Absolutely.
I like it. Well, tell our listeners, what's the scoop? What do you do today?
Absolutely. So I am most well known for being a tax goddess. I am a tax strategist, run a tax strategy firm, and a lot of people don't necessarily know, like, how is that different from a CPA? So I tried getting on today's podcast, right, to put all of the initials, all of the education after my name, and it was too long for the system. So to give you a little bit of understanding here, according to Google, there are 660,000 CPAs in the US. And CPAs do all sorts of things, right? They're auditors, CFOs, they do taxes, they do all sorts of things. In the tax world, as you start to specialize in strategy, those numbers start to come down real fast. So after being a CPA, I've got my master's in tax. There's only 60,000 masters in tax. There are 807 certified tax coaches. So that's the beginning of tax strategy specifically. There are 253 certified tax professionals. So that's the next level. There are only 15 of us that are certified tax strategists. And they rank us every single year based on how much we save people. And so this year we're at 1.68 billion. That's a lot of strawberry ice cream. 1.68 billion. And so we're ranked in the top 3. They refuse to tell us who's number 1, but I've seen the other 2 numbers. So
yeah. Well, I think they should sprinkle on the energy component of it, and because if they did that, I would be sure that you're the number 1 there.
Oh, you are too sweet. Yeah, everybody, when I tell them I'm a CPA, they're like, no, you're not. I'm like, I'm passionate. I love what I do. I get to save people money. Like, how do you argue with that, right? So
yeah. Well, let's start off. I mean, all the time when I tell people about real estate and when I'm talking about investments, everybody talks about, I need a good CPA. But they don't really understand what they're looking for when they're talking about a good CPA. We're here at the end of November. Now is the time to put a bow on whatever you were going to do from a tax strategy standpoint for this year, not wait until March 15th. But talk to us a little bit about, like, how you differentiate strategy from being a typical CPA that files your taxes.
Absolutely. So in my opinion, you really need, it's a 3-legged stool. Okay. You've got to have you, the client, right? The taxpayer, because you need to be able to tell your team, and there's many other people on the team. Okay. But you need to tell your team what it is you want in life. So some people want to retire. Some people want to travel around the world for 3 years. One guy, when he called us, without even introducing his name, he's like, I want to write off a yacht. Do you know how to do it? Okay. So it completely depends on what it is you want in life. And without knowing that, the rest of your team, so your CPA, who's the person generally who prepares the taxes, files the taxes, checks the box, make sure it's all filed properly. You're not getting thrown in jail, these kinds of things. Okay. They're one leg of the stool. Then you've got your tax strategist. Our job is to help you envision the future. So you want to buy that yacht. You want to retire in the next 3 years instead of in the next 20 years. How do we do that? Which strategies do we use that the client and the tax strategist implement together to then hand all the paperwork over to the tax preparer and say, great, it's all done. Report the stuff on the return. Okay.
Mm-hmm.
So when we're talking about taxes specifically, there's really kind of this three-legged stool. And when you look at the bigger team, then you're looking at, well, what about your financial planner? What about your estate and trust attorney? What about your insurance planner? Not your insurance guy, not the guy you're getting car insurance through, but what about infinite banking, premium financing, like actual planning? What about charity? If you're charitable minded, right? We might need somebody on the team that does private foundations or donor advised funds. So having the proper team is always, in my opinion, the very first place to start. And the big question then becomes, well, Shauna, how do I know if I have the right people on my team, right? The right seats on the bus, okay? This then becomes to me, well, what are you into? Okay, so CPAs, strategists, we're all very different based on what you want. Do you want to go down the real estate path? Are you more the charitable path? Are you trying to build an empire that you're going to pass on for 6 generations? Okay. Different CPAs have different specialties in these areas. So you mentioned real estate, for example. If you are a real estate person, you've got 3, 4, 5 properties, you've already done cost segregation, which is like the low-hanging fruit. These are basic tax strategies that any good real estate CPA should have already told you. So if you've got real estate and you have a real estate CPA and your real estate CPA says they know real estate, but they never told you about cost seg, you don't actually have a real estate CPA. You got a guy that thinks that they know real estate. And so, as it's one of the things that as a strategist, people will ask us, listen, here's my world, here's everything I'm doing, here's where I want to go. What questions should I ask my current CPA, my current tax preparer, to know if they really know how to file the forms? Because if they don't, no problem. That's okay. Let's go find somebody who does. And as your strategist, we become effectively your partner. We can help you vet a CPA. That CPA knows what they're doing. That CPA doesn't, because we know what they should or should not know.
So am I hearing like you almost are like a virtual quarterback for all things tax? So if I want to combine like a private foundation and a real estate holdings as well as an estate plan, you might be like, hey, I'm good at this one little area, but what you're trying to do is let me go grab this other resource in my network. And that's kind of the value of a strategist. Okay.
You got it. Yep. We know all the people that do all the things. And so if you don't have one, we'll get you to one that is good and above board and vetted and trustworthy and all the things that make people nervous when you're dealing with a professional in your money, right? Because you don't want to give your money to some fly by night. Oh yeah, I'm going to set up a private foundation. Like, you want the good one, right? You want the good one. Yeah. So absolutely, and on the other side of that, we will tell you if that's not our specialty. So for example, like I know nothing about nonprofits, nothing, right? But we got Brenda. We love Brenda. Brenda knows all that, right? So. Yep.
Yeah. It's interesting that you mentioned that, because when I first got involved in real estate and investing and all that kind of stuff, the first thing that Robert Kiyosaki in his book told me was to go find a good CPA. So I'm like, oh, I can't use TurboTax anymore. So I went and found a CPA who somebody was using. And this CPA didn't know that you could carry forward some depreciation if you didn't use it in the current year. And so it was 3 or 4 years later where I went to my now CPA, my current CPA, and he was like, hey, wait a minute, you didn't take advantage of all this. Where is it? And I'm like, what do you mean? I was told you couldn't carry it forward. So it's, there's filing your taxes, and then there's actually knowing little niches within whatever you're trying to do.
100%. Oh my, okay. I'm having a heart attack for you. Hopefully your new CPA was able to amend and get you the money and do the,
Yes, we figured it out.
Okay, good.
Well, one of the things I found interesting just doing some research about you too is you help people think about how they can save money, not only in a tax piece, but what I would call like a profit first methodology. So if our listeners have never heard of the concept of profit first, maybe talk a little bit about that and how you can implement that in your strategies.
100%. So let me come at it from a really big picture here. Okay. Certain strategies take money. Certain strategies do not take money. Okay. So, let's go, for example, writing off your dogs. Okay. You're already spending money on your dogs. Now I have 5 dogs. I have 2 German Shepherds, a Cane Corso, and 2 little 55-pound mixed mutt adorable things. Okay. They are expensive, right? Especially that Cane Corso. She eats me through house and home. She's a tank. Okay. If you're already spending that money, okay, if you want to write them off, you have to know how to write them off. So you can do that, and that's fine. Okay. But you're not spending additional money, right? Like you've already spent it. You're not putting in more money. It's just a question of how do I change it so that I can write it off so it becomes an ordinary, necessary, and reasonable expense for my business or for my rental property or whatever it is. Okay. There are some strategies where you need money. Okay, so alternative investments, going into oil and gas, solar, historic preservation easements, 831B captives. Okay, side note, there are good ones and there are bad ones. So make sure you're working with good, vetted, above board people on that thing. But if I come to you, so let's say you call me, okay, and Matt, we get on the phone, and you're like, great, Shauna, I'm so excited. I want to create a tax plan. It's November 20th, and we're going to do it here. I don't have any money. Okay, well, we can do the non-money strategies, right? But the savings on those generally tend to be small. Okay, You need cash. Now, most people are not thinking about. Some people are really good; they're savers, right? They've been squirreling away 5% a month, right? They're doing their thing. Okay, that's a part of where Profit First starts to come in. What Profit First talks about is it says, listen, if you're a business owner and you're putting your blood, sweat, equity, and tears into building this business, okay, you're not going to do it for zero, right? Like, would you build something to lose money or make, no, why would you waste all that energy and effort on that? You want to decide in your mind ahead of time, I am only willing to do this business, to put in the work, to put in the effort, if I get to take home 7%, 10%, 25%, like whatever that number is. Okay. Now, the theory of Profit First, it was written by a guy named Mike Michalowicz. It's a great book if you want to read it. What he says is to break up those numbers. So let's say 5% to the owner, no matter what, if I'm not taking home 5%, we ain't doing it. Okay. Most people, unless you have a tax goddess on the team, most people are probably paying somewhere between 15 to 25% in taxes. Okay. So you got to put aside money for that. You may want to have an emergency fund, right? Maybe you should put away 3 to 5% for that. What if you're trying to pay off credit cards, right? So maybe you want 5% going to that. So you're breaking up the amount of money that comes into your business into percentage chunks of goals, dreams, hopes, things that you are trying to accomplish. Okay. So the reason why he calls it Profit First is because he says, okay, well, if $100,000 comes into my business and I've decided I need retirement savings and tax savings and emergency fund, okay, and a little bit of money for tax strategies at the end of the year, okay, that means 30% of my money needs to go into my Profit First buckets, and it needs to sit there until I need to be ready to pay something, move the money, do something with it. Okay. So one of the things that Tax Goddess has created, awesome little app. It's all automated. It does all this stuff in the background. It's called Cash Goblin. This little dude right here. He's only on iOS. I'm sorry, Android users. We're getting him to Droid, okay? But what the little goblins do is they run around in the background, and every single transaction out of your bank account, if you've decided you want 5% to be put into your tax strategy slush fund, so that in December, when you talk to your strategist and your strategist says, hey, we need to write a check for $50,000, you're great. I've got it. It's in my tax strategy slush fund. So we love Profit First from that standpoint. Most tax strategies, if you really, really want to maximize every dollar, every strategy, everything you can, you really need to be saving at least 25% of your gross income into a tax strategy slush fund. And that's why we built Cash Goblin. So
yeah, I love it. I think that actually Robert Kiyosaki's best book was The Cash Flow Quadrant. But one of the things he talks about was like how money flows, right? Most people think income comes in, I need to pay my mortgage, my cell phone, my car payment, whatever's left, I'll save and invest the rest. About 10 years ago, I started, every check that I get, before it even hits my bank account, it gets split off into a separate account, because I know just like the human nature of pulling up your bank account and seeing extra money there. Exactly.
I get
I'll
strawberry
buy that
ice
thing
cream.
I'll buy that strawberry ice cream. I'll buy that thing online. And all of a sudden, you get hit with a big tax bill on October 11th, like I did this year, and it was due on October 15th. And you're scrambling to find that extra 5 figures that you need to go put into your tax money. So,
and you're hitting on a really, really important point here, right? October 11th, and you had to scramble 4 days to pay the government on October 15th. One of the things that I love about being a strategist, okay, is that, so here we are, we're in November, okay? I know now, right now, based on what we agree that you're going to do before December 31st, what your tax bill is on April 15th. We know what it is. We know how much cash it is. We know how much cash, if we have, let's say, $100,000 tax bill, if I invest 50 and my tax bill goes down to 70, now I'm only out 70, I'm just to 20, now I'm only out 70 instead of the full 100. And that's one of the things that most of our clients tell us is the most valuable thing that we do for them is to write, we call them tax calculators, okay? We basically prepare a fake tax return on a giant spreadsheet that you can play with. If I put 100,000 here, what does that do? If I take that out and I put this 100,000 here, what does that do? Ooh, it's better. If I take this out and put 50 here and 50 here, even better, right? I love, love, love the tax calculator piece of what we do because for many people, taxes is a very ethereal, up in the clouds kind of thing. It's hard to envision, and so many people are visual learners, right? If I can see it, if I can play with kinesthetic, if I can play with the numbers, it sinks into the mind so much easier. So, and anyway, I love the fact, but I'm so sorry you got it on October 11th. That's heartbreaking.
yeah, I'm glad you all provide that tool too, because even if it's not 100% accurate, it's at least directional. I think the frustration I had was you all saw my books, you saw my numbers, you saw my investments this year. Like, could you not have given me some sort of heads up around what this was going to be? And they're like, yeah, we do that for about a $1,500 fee. And I'm like, whoa, okay, I guess I'll just wait.
I guess I'm guessing. Yeah, I'm just, I'm not a big fan of guessing. I'm just not.
Yeah.
And I mean, you hit on an important price here, or an important piece, which is price here. Okay. Is knowing shorter than 4 days worth $1,500, right? Knowing itself, maybe not, which is why you made the decision of like, well, I guess I'll just wing it. I'll use profit first and put 25% in this account and like, fine, then it won't matter. Okay. But when you're looking at the overarching of tax planning, of tax strategy, we are not looking at a single 4-day period, right? When we talk about tax strategy, we're looking at this year, next year, the year after that, the year after that. When you're going to sell that piece of real estate in year 4, okay, then in year 5, when the taxes hit, we need to do this. So when you look at the investment, you're really looking at an ROI of, at least with us, a one-time fee, right? Ranges anywhere from $65,000 to $85,000, but your ROI, our average ROI is 23.4 times. So, we're talking lifetime. How do we get earnings that are tax-free forever? You never pay another penny ever to anyone. These kinds of things are all a part of looking at that planning. So yeah, for 4 days for $1,500, I'm with you, but for a lifetime, different matter.
Yeah.
So
yeah. And I think that's the key, right? Is you are playing a lifetime game with taxes. I think taxes are the most expensive expense you'll have in your personal economy
it's not even,
for the rest of your life.
They are.
Yeah.
100%. Yeah.
So you might as well try to at least control and minimize that as much as possible.
I mean, when you're looking at, listen, California and New York have the highest tax rates in the country, 63%, 63 in California. Okay. When you use a tax strategist, our average rate for our clients is 6.92%. So if I can get you down 10 times on that tax rate, I mean, why would you not? Right. So,
yeah. Let's talk a little bit about the future of tax planning and policy. Now, obviously, you aren't writing laws in Congress or have the ability to sign those or veto those or whatever, but there's a new administration coming in, and part of the old administration signed a Tax and Jobs Act, which had a lot of things in there great for real estate investors, specifically opportunity zones and 100% bonus depreciation. Just your ear to the street and your tax circles that you run around in, what are you hearing from a tax policy standpoint that we should be looking out for over the next 4 years? And where should our mind be thinking about that tax slush fund where we could deploy capital and get a return, but also some tax benefits along the way?
Absolutely. Yeah. Hit both ends of the stick for sure. Yes. So first things first, I'm thrilled that Trump got in from that standpoint. I do believe ear to the street, because you're right. If the goddess could sign laws, it'd be a different matter. But there you go. So we do believe that they're going to extend the TCJA or TJ. I always get it wrong. Whatever. The Tax Cuts and Jobs Act, TCJA. We do believe they're going to extend it. We do believe that they're going to go back to 100% bonus depreciation, because yes, they put in bonus depreciation, but it's been declining over the years, right? Mm-hmm. So it went from 100 to 80 to 60. So we're expecting it to go back up to 100. I am looking forward to some of the new, some of them are big, some are small. Some of the smaller credits that are coming in, Trump was talking about, for example, giving homeschool credits. If you're homeschooling your children, a lot of entrepreneurs are not thrilled with the public education system. And so having homeschool credits and that kind of thing is really helpful. I'm very excited about the discussion about having a 15% tax rate at our C Corps. If that happens, I think there will be a lot of movement towards C Corps all day. 15% is hard to beat generally for that kind of income, especially when you get after 5 years, you get a $10 million exemption on a sales price. I mean, there's some cool things in C Corps that you can really play with. So I'm excited to see that. And then, of course, the benefits of having Trump with, of course, the presidency and the Senate and the Congress, we're expecting these things to move. Right? Between him and Elon, we're expecting movement fast is kind of the commentary. But, what we've always told clients is, I don't write the laws. You're right. We don't plan on maybes. The day the law passes, I read about 3 IRS releases a day, every day, morning, noon, and night. What's going on? What are the new court cases? It's my job as a strategist is to know things, right? So, we're up to date on it. As soon as it passes, we're on it. We will describe. We'll talk about it. What are the changes? The one that many, many, many people, especially our successful entrepreneurs, were really worried about was the estate exemption. There was a lot of discussion. It's currently, close to the $13-14 million mark. A lot of discussion about that going down to 2 million, 3 million, 5 million, somewhere in that range. With Trump back in, we're not expecting that anytime soon. So.
That's a good thing to highlight. A lot of people call it the death tax. The death tax, people think is basically if I die with $100,000, then the government's going to come get half of it. No, you have to pass down.
There's got to be bigger numbers.
15 million.
Yeah.
Before we get into kind of this conversation of legacy planning and estate planning, a couple of quick questions. C Corp tax rates at 20% today. Is that?
Hey, fellow investors. Before we dive into our next segment of the show, I wanted to take a quick moment to talk to you about a fantastic opportunity for you to invest with me. As you know, here at Ice Cream with Investors, I'm passionate about real estate investing and helping you navigate the exciting world of wealth creation through real estate. And that's why, for the first time, I'm thrilled to tell you about an opportunity for you to invest alongside of me. Over the past 3 years, I've been investing in multifamily, mobile home parks, car washes. I've even become the bank and lent out money to fellow real estate investors on a short-term basis. And now you can come join me. If you would like to jump on a call and learn more about this opportunity, head to icecreamwithinvestors.com/invest and find a time for us to connect. And now back to the show.
At the moment, it's at 21, correct? Plus, okay. And that's the federal level, plus if you have state taxes. Okay. He's talking about dropping it to 15 for manufacturing and something else that I'm not going to remember at the moment. Because like I said, until it happens, But right. I have an odd feeling. One of the old strategies from many, many years ago, good or bad, I've been doing this for about 25 years now, and one of the old strategies forever ago was to split off revenue. Right? If you have an S corporation and it's doing multiple streams of revenue, to split it off and create a C corp and an S corp to play games with entity structures, timelines. I think we'll see a lot of that coming back if we drop from a 21%, especially to a 15 on the C corp side. So.
Yeah, which sounds great for tax professionals and legal advisors.
Yeah. Well,
Um,
great for the clients too, right? Hard to argue.
right.
If we can get you to zero, why not, right?
Absolutely.
So, yeah.
Absolutely. The 100% bonus depreciation. So you're right.
Yeah.
It's stepping down. Most people don't realize that passed, I think, the Senate this year or the House, and then got stalled at the other House or Senate. But that basically had bipartisan approval to
Yeah.
submit to the president. And apparently the president was going to sign it too.
Yeah.
And then we got into an election season. So that is
And
something
everything
that
stops. Yeah.
exactly, if you are a real estate investor out there, if you buy depreciable assets and use them in your business, that's something definitely to look out for, and which will spur a lot of investments, and the people selling properties and selling big equipment will all have
Yeah.
jobs. So it's actually a good
Which
thing
is the whole
trickling
reason
down.
they do things, right? I mean, the
Right.
government gives us these incentives to incent us to do whatever it is they want us to do. So, yeah,
Right.
I'm thrilled because we're definitely hearing it as well. A lot of people, the funds are moving, people are buying things, because there was quite a bit of a hold. So, yeah, very
Yeah.
exciting.
Tell me about it.
Yeah.
The piece I wanted to ask you about, though, was this idea of estate planning. So you're not my CPA. You are not any of the listeners' CPA. So this is
Correct.
all just brainstorming. You
Don't
are a
listen to
CPA,
advice
but
you get on a podcast.
that's right. That's right. But it is something that I've thought about recently, is like this idea of legacy planning. So we have two kids. We have assets, we have buildings, we have businesses. So I'm trying to put this all together about how to pass this down in a thoughtful way, but also a very tax efficient way.
Yeah.
So I guess just high level, give me some things that I should be thinking about when I'm going through this idea of an estate plan.
Absolutely. So for me, it actually all starts with the children. Okay. Forget tax for a second here. Forget, children and charity are kind of the two big things that we hear. Like, where are you going to put your money, leave your money, whatever it is. Often my parents, when the children are younger, okay, 5, 10, somewhere in here, you don't know what their personality is. You don't know how they're going to handle money. What happens if you die tomorrow? Car crash, heaven forbid. Right? You just don't know. So one of the very first places to start is always, always, always a revocable trust. Period. It has nothing to do with tax purposes from that standpoint. It is purely when you have little ones, I call them little ones. If they just came into a bunch of money, they're going to need somebody to train them, somebody to help them, make sure they're taken care of. You don't want an 18-year-old all of a sudden magically with $5 million. They'll burn through it on the new Lamborghini they buy every year because they got the cash. I mean, so a revocable trust is kind of the place to start. When you start looking at assets and now moving into more of a tax efficiency thing, the next thing to look at is the size of the estate. So again, if you're married, right, at the moment, you have effectively a $30 million estate exemption. If you're under the $30 million estate exemption and far under, if you're at 5 million total, okay, generally we're not worried about a lot of planning, right? For estate purposes, we're much more focused on tax mitigation now, gain money, save money, earn money, whatever it is. Okay. However, if you're getting closer, right? If you're at that 18 million and because as you get more capital, the speed at which you get capital speeds up as well, right? So you go from 1 to 2 million, it takes 3 years, but 2 to 4 is 1 year, right? Because now you have capital to build capital. Mm-hmm. So as you get closer to the bigger numbers, okay, that's when you really start looking at family limited partnerships. You may end up with QSST trusts for the children. You may end up with life insurance trusts, ILETs, okay? You may end up with a private foundations, but if you're charitable, you may end up on that private foundation side. So a lot of it really depends on, again, who are you? What do you want? Where are you at size-wise? One of the things that just really drives me nuts is we have people that come to the office and they say, listen, went to a webinar, went to a seminar, there was a lawyer, and the lawyer said that I need these 18 entities to really protect my family, but you've got like one rental house and like your business makes $200,000 a year. And I think this is what you were alluding to earlier, right? Happy lawyers. Not to say their structures are bad, okay, but I'm a big fan of keep it simple, okay? Mm-hmm. Do what you need to do when you need to do it with a general understanding that over the next 3 to 5 years, my trajectory looks like this. And so I'm going to know about it. And when I hit a marker point, so when you hit 18 million, you start looking at these things. When you hit 25 million, you start doing these things, right? We just see so many people kind of get trapped in these very complex, very expensive structures, multiple trusts, multiple layers, multiple entities. And it's really just costing you more than it's saving you. And certainly, please understand, I'm not a lawyer. Okay, I'm a tax goddess, right? CPA. I do the number side, but even from a monetary side, now you have QuickBooks files and bank accounts. I mean, it can be very complex very quickly. Generally, when you start to get to that size, right, when you start to get to $18 to $25 million worth of net worth, you start working with what's called a family office. Mm-hmm. And the family office has the right professionals. We go back to your team, right? To have the right team in place to help you get there. So it is another question. If your state, your value is starting to get into those numbers, make sure that as you're interviewing your team, you're interviewing them for size as well. What is the average size of clients that you're working with? You may really like your CPA, but if all of the other clients that they're working with make $200,000 a year and you're making $2 million a year, they're just not going to have the same level of advice or knowledge that they would in your situation. So.
Really good point. Really good point. I want to double click on the insurance piece. So I'm a big fan of insurance and death benefits and cash value and all that because of a number of different reasons. But my general understanding was that insurance policies are passed down tax-free and they're exempt from the 30 million. But you mentioned a foundation around insurance. Can you just explain that?
Talk about insurance for a second.
Yeah,
sure. Yeah. So the best way, easiest way for me to explain this goes back to the Rockefellers, the Kennedys. Life insurance has been around for basically as long as we've been alive. Okay, you die, I'll pay you something. Here you go. So really, there's two different ways to do life insurance. Okay, there's the standard traditional way, right? You buy a policy when it's meant for death benefit, right? So when I die, my family is taken care of, my house mortgage is paid off. Everything is settled and we're good. Okay. That type of policy can be important, especially if you have children, if you have mortgages, these kinds of things. It's a good idea to have some basic either term or death benefit kind of policy. Okay. When you start to talk about strategy and planning, cash flow, cash flexibility, where can I borrow from? How can I obtain, more assets, use my capital more efficiently? We start looking at things like whole life, which would be the most conservative, up to probably an IUL or a VUL, which is a little more on the aggressive side, taking a little more risk with it. But the flexibility is spectacular. You basically become your own bank. Okay. And so where the Kennedys, the Rockefellers have really used this is that the ILIT, Irrevocable Life Insurance Trust, is one of the most common forms of these kinds of trusts. You would buy a policy on you as a parent, okay? When you pass away, the insurance is inside the trust. Insurance money is not taxable, so the trust doesn't pay any tax on the proceeds, okay? The trust, if you're trying to build an empire, this really kind of kicks in. The trust would buy insurance on the children. So now the children get older, they have children of their own. When they die, that money goes back to the trust. So over time, the trust gets bigger and bigger and bigger and bigger of all this tax-free money. Well, the tax-free money inside the trust, you can now buy real estate. You can buy the yacht. You can buy whatever, okay, investment purposes, and make more money and build more empire and do more things. So it really kind of comes down to what is the purpose? What is the goal? Are you just trying to prevent your family from having debt when you pass, mortgages, whatever? Or are you trying to build the next Roman emperor, right?
Yeah. Yeah. And that's where, I'm a big fan of the whole life policies and have several and use them to acquire more assets because that's ultimately my intention in the long run. But at the end of the day, it's a tool. It's not the answer to everything. Like sometimes you hear on TikTok.
There is no silver bullet. There's no silver bullet. Yes.
That's right.
Exactly.
Like even the best hammer is not a good tool for certain situations. So
not a screwdriver. Yes.
I would love to sit here and talk to you for the next couple of hours, but I'm sure you're going to start charging me by the hour if I keep asking you questions. So
part two, we can do a part two, Matt. We're good. All good.
So I'll switch us now to our last round. We're calling this the 4 toppings. My first one is, what is your favorite book, or just what is a book you've read recently that's given you a paradigm shift?
Favorite book is The 4-Hour Workweek. Okay. And for me, it's all about Tim Ferriss, of course. It's all about the footnotes. So if you read the digital version, go get the paper version and read the footnotes because they're not the same in the paper version as they are in the digital version. The paper version, forever ago, when I first started my business, saved me, we ran the calculations, it was almost $23,000 from one footnote in the first year. So footnotes, 4-hour work week. Tim, you're my man. So
yeah, I got a 700-page 4-hour work week book back there. I'm gonna have to go find that one footnote because that sounds like a very important one. Our second one is, what is the best piece of advice you've ever received?
Yeah, hope is not a strategy. Okay.
Love that.
Anytime at this point, it is so ingrained in my brain. When I hear somebody say hope, I'm like, I'm sorry, what? What's the strategy? That has saved me more times than I can imagine. So
yeah. Don't cuss at me using that hope word.
Love it.
Our third one is, what are you most proud of in your life?
Oh, my immediate brain went to Tax Goddess just in general. We just turned 20 years old this August. We have saved a lot of people a lot of money. I've built an awesome firm culture. I love our people. I love our team. I love our staff. Our clients. I mean, I'd have to say Tax Goddess.
Yeah. Awesome. Well, our fourth and final one is, if you could sit down and eat a bowl of ice cream with anyone, dead or alive, who would it be and why?
My brain immediately goes to Einstein. So I started my journey in life as an astrophysicist. So very long story short, Einstein would be my man with a bowl of ice cream, I think. So
that actually is a little bit more frequent than you would think.
I'm sure. He's kind of cool.
And he had his hands in a lot of different things and multidisciplinary, and just like yourself, I suppose. Well, Shauna, fantastic conversation, very valuable for our listeners. If our listeners wanted to reach out to you, learn more about Tax Goddess or anything else you've got going on, where is the best place we can point them?
TaxGoddess.com. Super easy to find.
Perfect. We will link all that in the show notes. And then Shauna, thanks for coming on.
Thanks so much for having me.
Thank you for listening to Ice Cream with Investors. If you like what we serve you here, it would mean the world to me if you would like, subscribe, and leave a review on your favorite podcast app.